The leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying that Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. But what I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it, and those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market.
This week, a poll among delegates from around the world attending the London Bullion Market Association's annual gathering predicted higher prices in a year's time for gold, silver, platinum, and palladium. While gold is expected to climb around 10% to $2,917.40 an ounce by late October next year, delegates held a very strong view on silver, seeing it gain more than 40% to reach $45 an ounce, with experts noting that industrial demand continues to drive market deficits as mine supply struggles to keep pace. Throughout his career, RickRule has been widely regarded for his expertise in precious metals, mining, and energy investments. He expresses curiosity about recent trends, noting that foreign central banks might be speculating based on silver's historical outperformance after gold establishes a trend. Rick underscores that the increasing central bank purchases of silver have caught him by surprise. According to a report released by Interfax this week and cited by Bloomberg, Russia's draft federal budget outlines plans to significantly bolster its holdings in precious metals over the coming years. Notably, the budget includes plans to acquire gold, platinum, palladium, and silver for the first time. Regarding this trend, Rick also reflects on the potential cultural factors, particularly in India and China, that could be driving this shift, but the situation remains uncertain. Although Rule doesn't assert that central bank buying will drive silver to break out, he predicts that if silver does gain momentum, it will result in remarkable financial opportunities for those able to manage the volatility. Meanwhile, he particularly advises cautious allocations to high-quality silver stocks. Now, we present the clips of Rick Rule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The increasing central bank purchases of silver, which you've correctly documented, surprised me. It isn't something that I've seen before. And I've been struggling. Well, I haven't been struggling. I've been asking people who are smarter than me what it means. I haven't received a satisfactory answer. Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries in silver. Part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. But what you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. If your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. What I am saying is that when silver does break out, it's truly an amazing financial circumstance. Those speculators who can afford it, and those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market, an allocation to the higher quality silver stocks and the silver juniors, a small allocation to be sure, uh, an allocation that you can afford to lose 30% of if you're wrong, and an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday, is something that some should consider.
Based on recent trends, RickRule says demand for precious metals is rising from a very small base, with less than 0.5% of U.S. savings tied to them, likening their economic importance to a pimple on an elephant. He predicts that if demand returns to the 4-decade average of 2%, it could lead to a fourfold increase, driving prices significantly higher. In the third quarter of 2024, gold prices demonstrated remarkable volatility, perhaps reflective of the market environment it currently exists in. The precious metal initially extended its choppy performance from May and June before surging in July. Benefiting from favorable market conditions, gold first reached several new highs, climbing from $2,000 to $2,685 per ounce, a gain of over 30%. In the coming months, VT markets see multiple factors supporting gold's safe haven appeal. One of the primary drivers is the shift in global monetary policy, with major central banks embarking on rate cuts. As real interest rates decline, the appeal of non-yielding assets like gold increases. Concurrently, Rick views the current shift as a sign of growing retail demand, noting that while U.S. investors remain skeptical, gold outperforms many other currencies worldwide. Let's get back to the interview.
Donegan, that's picking up very quickly, albeit from an infinitesimal base. I've talked in your show before about the fact that precious metals and precious metals-related securities comprise less than 0.5% of savings and investment products in the United States. I've used a colorful analogy that they're as important to the economy as a pimple is to an elephant's behind. They kind of don't matter. But it's worthy to note that over the last 4 decades, that market share has been 2%. So if demand for gold and silver merely reversed to the 4-decade mean, which is what I think it will do, that implies a 4-fold increase in demand. And that would do a very, very interesting thing to price. Away from arithmetic and into narrative, I note that inbound inquiries, which is to say subscribers to Rule Investment Media, are currently running about 50 per day. The majority of those, interestingly, are non-U.S. now, and they are coming from everywhere. A couple of interesting trends. One stands to reason, a lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk. I think come to the rightful conclusion, they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my inquiries, a little less, 30% of my inquiries, are now coming from young women. It used to be that the gold audience looked like me. Old, fat, bald, white, rich. There is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, as you know, is now, at least nominally, in the bullion business. And they have reported that a surprising number of the buyers of gold have been younger, and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies. When we talk about gold breaking out into nominal highs against the U.S. dollar, in other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the U.S. dollar, gold has already established momentum. It's already established a trajectory. And if I had to guess why an American database like Rule Investment Media is becoming increasingly non-U.S., I suggest that the price action in precious metals in those securities has already demonstrated thesis, while in the United States, the thesis is still being questioned.
Gold is overbought, but history suggests it can become even more overbought. Meanwhile, silver made its highest monthly and weekly close in 11 years. Both metals have room to move before stiff resistance sets in. With gold and silver showing potential for substantial gains, Do you believe retail investors in the US will start to follow the global trend? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.